Hey everyone, we wanted to bring a quick webinar to you guys to kind of keep you up to date of what's going on with the market. We know that this is a crazy time and that things are happening very, very quickly. So we want to be able to provide you guys with some information that might help you be able to help your clients better during this downtime. So we're going to share a PowerPoint that we put together. And hopefully this will give you guys some insight. So I'm going to do a quick share of my screen.
So basically, this is a market update for you guys over the last few days and weeks coming up to this. So it'll be about how will the coronavirus lockdowns impact the U.S. housing market. First thing, the world changed on March 19th. Basically, we became a country on lockdown. So just to give a timeline of that, on March 19th, the San Francisco Bay Area went into lockdown, followed by the states of California, New York, New Jersey, Illinois, Indiana, Florida, and Louisiana. On March 23rd, Governor Whitmer issued a stay home, stay safe executive order in Michigan. And as of March 25th, about 1/3 of the US population is under some kind of lockdown directive. Today is March 29th, and we now know that that is more than half of the country. According to the Mortgage Brokers Association, mortgage applications to purchase a home plunged in states where lockdowns went into effect.
So we want to show you what happened in a short span of 10 days. So on March 9th, there was reports of how sellers and buyers were reacting to this. And then on March 19th, how drastically it changed.
So in the two surveys on March 9th, 81% of agents surveyed said their sellers had no interest in removing their homes from the market. And on March 19th, that number dropped to 61%, with 16% of sellers actually taking steps to stop marketing their homes. On March 9th, only 16% of agents had noticed decreased interest among their buyers. On March 19th, 48% of agents had noticed decreased interest among their buyers. And then on March 9th, 13% said the stock market was a major influence in the decline of buyer interest. And then March 19th, 28% said the market was a major influence in the decline of buyer interest.
So when we put this together, it was literally 3 or 4 days ago. Things have changed even more since then. So you can kind of get an idea how quickly and how fluid this is.
So taking a closer look, across the United States, purchase mortgage applications dropped 15% in the week ending on March 20th from the prior week, according to the MBA. During the same week, the average 30-year fixed mortgage rate was 3.82%, which is much lower than the 5% mortgage rates in late 2018. During the same week, ending on March 20th, purchase mortgage applications dropped 23% in California, 35% in the state of New York, and 17% in the state of Washington.
So we don't have the Michigan statistics, but my guess is it's pretty similar. And one quick thing about rates, we've covered this in other things, but the interest rates are varying very greatly every day. So we're seeing as much as a 2 percentage point increase or decrease depending on any given day or any given week. So things are very, very, very volatile out there.
Purchase mortgage applications drop. From October 2019 through March 13 of this year, purchase mortgage applications had soared year over year in the 10% range each week, peaking on a decade high at the end of January. But this reporting week ending March 20th, purchase mortgage applications dropped 11% year over year. You can see that in this graph.
And for obvious reasons, especially in Michigan, people just aren't, first of all, comfortable allowing people in their homes, and also there's the order saying that you can't really go in people's homes. So
there's also growing concerns about tighter lending conditions for non-conforming mortgage loans. Buyers may have a harder time getting a mortgage if their debt-to-income ratio is higher than 43 to 45%. 2, they are self-employed. And 3, their credit score is below 640.
And I would add to that, it's really not just non-conforming loans. It's also FHA. FHA is most investors under 640 are pulling out. So if we have clients that are under 640 right now in process, they're locked. We're going to close those loans. But anybody under 640 going forward will not be able to get financing on an FHA loan. So yeah, things are changing very, very rapidly, and it's obviously going to affect a lot of people.
Well, and it's very, very important you have a go-to lender, whoever that is, that knows what is going on and is keeping abreast of everything, so that you're not telling clients something that isn't, it's different from it was 5 days ago. So you need to be made aware of that. So where do we go from here? According to Capital Economics, expect a sharp drop, but also a strong upswing coming at some time in the second half of this year, like a V or a narrow U. You can see that in the diagram. Home sales could fall by 35% annually this spring compared with the last quarter of 2019. That would mean total home sales of around 4 million annualized, the lowest since the start of 1991. But there will be a return at some point of pent-up demand. Coronavirus impact on the home sale market will be relatively temporary.
So, and the reason obviously they're saying that is because the market was so good before this. They think once everything opens up, it will return fairly quickly, and rates will continue to stay low throughout this, just because of the maneuvers that the Fed has done, and what else is going on in the market. We should continue to see low interest rates.
So let's end on a positive note. The good news: buyers and sellers may be a tad reluctant, but there will still be some activity. We're developing a virtual open house checklist for our realtor partners. Unlike previous drop-ins home sales, like during the subprime mortgage rate crisis, this is not expected to last nearly as long, and demand for housing was especially strong before the coronavirus hit the US. Assuming a strong fiscal and monetary policy response, pent-up demand from the spring buying market season will help sales recover by the end of the year.
So what we're trying to focus on for you guys to be able, so that you can focus on with your client, is to provide you guys with information and things that you can bring to your client, to your clients, to help them when that pent up demand is ready to roll.
So 2 things to be looking for that we have is the virtual home tour. If you're not using those, we have an 8-page guide that teaches you how to do that. We also have resources that will help you make the shift in marketing. Your marketing can't be sales. It can't be like what it was 3 weeks ago. It needs to be all about adding value, positive things, educating them on what's going on. So we want you to be their go-to realtor for life and to add positive value.
So as you can see on the page here, we are still available. Our office building is locked, but everyone is working. Everyone has the capacity and ability to work from home, and your clients are being well taken care of. We've got the technology set up. Our mobile app is absolutely awesome, and that's working really, really well for people to apply, and then we can contact them. We're doing a lot of Zoom conference calls and things like that.
So we will all get through this together. Please reach out to anyone that you work with at Michigan Mortgage. And we are here to help during this time, you guys. We'll get through it.
Thanks, everyone.
Thanks.